Thank you everybody for coming. I was joking with some of the other speakers, they should be thrilled that I'm going first because I'll make this look really good. But basically, I think the reason I'm kicking this off, as we start to move into some of these other speakers and talking about the whole process of buying your first home, what I'm here to talk about is how to build your financial security leading up to that moment. When are you ready? What are things you should do and consider when making such a significant purchase in your lifetime or your family's lifetime? I guess maybe a good place to start before I jump in. I'm a financial advisor with Northwestern Mutual. My job is helping my clients get from all their point A's to their point B's in really two ways. One is wealth accumulation. But more of the stuff we'll focus on tonight is more of what I call the defensive components of your planning. And that's your risk management and insurance planning. And it all ties in when buying a home, and hopefully I can do a good job explaining to you why. So, why is money a problem for some people? There's a couple reasons. Lots of people worry about money. Lots of people delay in saving money, and lots of people have regrets. And it's a lot easier to say, okay, I'll do that later. There'll be more time later, rather than what your gut instinct tells you. And that's usually the sooner you tackle these types of things, the better. It gives you confidence when you do, when you take action, and if you really have goals and you're goal-oriented. You'll see how some of these steps can really help you accomplish and maintain these goals. I think a key thing to consider is financial security means different things to different people. So while a lot of these concepts will apply to most of you at some point in your life, it's going to be to varying degrees. Kind of a definition of financial security, a feeling of confidence that you'll achieve your financial goals through taking action today. I mentioned those various tiers of planning we help our clients do. The risk management is usually going to be your foundation. It's an appropriate analogy tonight. If you don't have a solid foundation, you have a shaky house. This risk management piece that I'll focus on is what you want to have established as you start to buy homes, start to accumulate your wealth for you and your family, ultimately down the road start to preserve and distribute that wealth once you're retired and thinking about leaving legacies and things like that. So, financial confidence includes all these topics. I'm not going to go too far into all these tonight. Obviously real estate being one of those. Thinking about things, taxes, your investments, your job security, savings cushions, insurance being a big piece of what we'll talk about tonight. Things like college costs generally coming later in your wealth accumulation stage. But really what I want to talk about tonight is two things in your risk management planning that I think everybody should have, or at least seriously consider and have a plan for when buying a home. One of those is your long-term disability insurance. For those of you who don't know, I think most people know that you have it to some degree. My employer gives me that. I think we have it all set. 9 out of 10 plans I see, when an employer offers you long-term disability, it's a 60% portion of your base salary. Not total compensation, but 60% of your base salary. Now, a lot of people will just have base salary. Some people have significant bonuses. Sometimes people are paid in half and half. What you'll find is when an employer pays for your long-term disability, that's a taxable benefit. So 60% of your base salary, a true 60%, if you, God forbid, get sick or hurt and you're out of work for either a couple months, a couple years, or God forbid, even longer, it's generally not enough. I don't think you have to buy a home in this area to know how much they cost and how much mortgage payments are. So the reason this is critical is because if you're an individual, if you're a family with or without kids, we don't want this instance, particularly if it's just a couple months, to take you out of your home that you've worked so hard to purchase, that you and your family have dreamed about, made yours, done additions to. You've waited your whole life for this moment, and so this is just one component that you want to build out to make sure that there's really not too many things that are going to take you out of your home once you're in there. And so a way to build out your financial security around your long-term disability plan is you get what's called a supplement, a portable supplement. And you go out and you get that on your own, you apply for it, you go through a medical examination process. And this is a benefit you'll pay for out of your own pocket, but it's going to plug the gap between what you have through work and then what's available to you. The industry never allows you to fully insure your income to 100%. Basically, think they believe there'll be moral hazards if someone can get their full compensation by not working. But you can generally get 80 to 85% of your income replaced. And I've actually, having been in business for 3.5 years, I had a 30-year-old go on a claim once. This is not to fearmonger people. It doesn't happen often. 2 kids, have a house. It makes all the difference in the world if you take your proper plan, protect yourself, protect your family, particularly when you start to have significant monthly outlays for something like a mortgage payment. The other side of your risk management pyramid that I think makes you bulletproof, in addition to seriously addressing your long-term disability so that you and your family is set, is something as simple as life insurance. Everybody's heard about it. I think at a very basic level, you know that, okay, if something happens to me, sometimes you think, well, somebody gets rich, my family gets a lot of money, they can do what they want with it. They can be a lot more detailed than that, so you're never overinsured, you're never underinsured. And we try to use a 3-part equation. One, we want your life insurance to cover your debt and expenses. And the biggest piece of that, most of your debt, your biggest piece of that is your loan, your mortgage payments. And why is that important? Well, like I said, if you've worked hard to earn this house, buy it with your family, you guys have goals, dreams, Lord knows how many memories in this house, and something happens to, let's say, the mother or the father of a household, what does that mean? Are we staying in the house? Can we afford to make the mortgage payments off of one income? Maybe sometimes it's no income if that individual wasn't working at the time that their spouse passed. Really what you want your life insurance to do and how it relates to buying a home is pay that loan off. Take care of it. Allow your family to stay in the house. Allow them to, if they want to move closer to the family, they can do that. If they want to stay, take that financial burden off their plate. Give them the financial freedom to stay in the house, sometimes with their kids, and live out their lives there as they always saw themselves doing. Just kind of a side note, with that death benefit you have in your planning should also cover generally your kids' educations and any type of survivor income you would want after that. But really, just making sure as it relates to our night, the subject tonight, pay off the house, give them the flexibility to live where they want to live. It's obviously a difficult time. And just give them the financial freedom they deserve and that you want them to have. And I can't stress this enough, a lot of these benefits are available through your employers, always to some degree. In life insurance, it can be one-time your salary, two-time your salary, $50,000. It doesn't always mean that you're set. Think about it thoroughly. Think about, okay, now I just have some lump sum of money going to my family. What is it going to do specifically? Plan for it. Insurance is a big piece of planning, just like wealth accumulation, wealth preservation, and distribution. So if you're going to spend money on things, make sure it's accounted for, and make sure your family's taken care of.
All right, how much longer do you have, Martin?
Just a couple minutes.
Okay. I had, I said 5 minutes is all you get every time.
Financial pyramid is only as strong as its foundation. That's what I just want to kind of leave everybody with. As you get ready to approach buying this home, consider some of this planning. Really think it through. When you buy this house, it's going to be a big deal for everybody. And make sure that your family stays there, that they could be there the rest of their life.